You've bought that property and you're on your way to become a property mogul. Welcome back to Property and Tax Unpacked. In the previous episode, we looked at income and expenses relating to rental property. In this critical episode, we dive into the single biggest factor affecting your tax obligations as an SA landlord, your tax residency status. South Africa operates on a residence-based tax system, and your status, resident or non-resident, changes everything. Let's start with the SA tax resident. If you are an SA tax resident, meaning you are ordinarily a resident here or meet the physical present test, the rule is clear. You are taxed on your worldwide income. This means your net SA rental profit is simply added to all your income wherever it is earned. And the total is taxed at the progressive resident tax tables. Residents also benefit from the primary, secondary, and tertiary tax rebates that reduce your overall tax bill. Now, for non-resident status. A non-resident is someone who has formally ceased tax residency or who never established it. The critical rule for them is that they are only taxed on income from a South African source. Since rental income from SA property is explicitly deemed an South African sourced income, non-residents must still declare and pay tax on the net rental profit to SARS. The income is taxed at the same progressive income tax rate as a resident, but the major financial difference is that the non-resident is generally not eligible for the tax rebates, meaning they often pay tax from the very first rand that they earn. The practical difference lies in the annual tax return. A resident declares their local rental income alongside all of their global earnings, while on the other hand, a non-resident only declares their local rental income and any other South African sourced income. Getting your tax residency status right is essential to avoid penalties or double taxation. Always consult a tax practitioner specializing in international tax law. Join us for our final episode where we look at the moment that you sell this property, the complex rules around capital gains tax, and the dreaded non-resident withholdings tax. See you then.